Well, good afternoon, everyone. This is Scott Thompson from Schwab Coaching for lesson number 6 in our Stock Investing for Beginners webcast. The bell just sounded and the market is now closed, but we are going to look at when to buy. This is one of my favorite sessions to teach. We're going to do a little intro to technical analysis, but the main goal today is to help you understand 3 of the key buy signals that exist in the market. I think personally, everything's a variation of these 3 signals that we're going to talk about today. Ultimately, for homework, I want you to decide for yourself what exactly, and I mean that exactly, what exactly is your personal buy signal in each of these 3 ways. And we're going to go over some nuances with those buy signals and talk about how to do that. We'll give a shout out to Kevin and Robert and JD and Will and everybody else watching today. We have Barb Armstrong there in the chat, and she'll do a great job of answering any questions that you have. If you're watching the archive and you have some questions as we go through this, please post those questions in the YouTube comment area, and I'll answer those. I look at those every day just to see if there's some questions to follow up on this webcast. So let's jump right in here. Let me go ahead and share some important information. Remind everybody that the information we share today is for educational purposes only, not a recommendation or endorsement of any particular investing strategy, stock, or anything that we cover today. Schwab does not recommend the use of technical analysis as the sole means of investment research. We are going to be using the paper money trading platform on thinkorswim today. And there are some significant differences between the paper money and the real money or live account. We'll be talking about stop orders today. There's no guarantee that execution of a stop order will be at or near the stop price, so be aware of that. And remind everybody that investing in the market involves risk. Our lesson series, as you know, is 8 lessons. So we're on lesson 6, when to buy, little introduction to technical analysis. Over the next 3 weeks now, today, next week, and the week after, we'll be talking about some of how to implement these different things that we've been talking about in the last several lessons. Last week, we talked about fundamental analysis and ran a search trying to look for stocks with good, strong fundamentals, and we created a watch list of those. Today, our agenda is to talk about the tenets of technical analysis. What do technicians believe? We'll go over some candlestick basics. We'll talk about some technical analysis concepts. We have some great additional dive into technical analysis. We have a Getting Started with Technical Analysis webcast. We have advanced charting that Cameron does on Fridays. We have a lot of information regarding technical analysis. James does a class on Mondays and Thursdays on technical analysis. So if you want to take a deeper dive, we've got a whole bunch of resources available for you. Barb can probably post those. And in the meantime, go ahead and follow Barb Armstrong CS or Scott Thompson CS on x.com and get some additional information there. In addition to going over the tenets, the candlestick basics, and some technical analysis concepts, we'll talk about those 3 buy signals. And if we have time today, we're going to take a look at as many of those examples as we can. So let's jump right in here today. Technical analysis, we covered this a little bit last week. Technical analysis is the study of historical price and volume to decide if there is a trend and what that trend is. Fundamental analysis, of course, that we covered last week is analyzing a company's financial statements, balance sheet, income statement, cash flow statements, things like that, looking for value, looking for good fundamentals so the company can potentially grow. But today we're going to be talking about technical analysis, one of my favorite topics. And one of the tenets, okay, there's 3 main ones. One of the tenets or the beliefs of technical analysis is that price moves in trends. There's 3 different types of trends: uptrend, downtrend, and sideways. We'll talk a little bit about those in a minute. One of the other things that's really interesting, and I really like this one when I first learned it, is the market discounts everything. Now, the definition there is the current price as a representation of all the current collective market knowledge. The way I like to think about this is anything and everything that can affect the price is already doing so. Okay, so, go back and watch the recording, listen to that a couple times. And then the third one is that history repeats itself or looks similar. That's why when we measure previous moves and things like that, we can kind of assume, okay, now there is a disclaimer here, but when humans, and we're still humans trading the market, right? But when they see something happen, they tend to react similarly to that. Now, this does not guarantee, okay? This does not guarantee past performance. or future results or investing success ever. How often? Ever. Okay. But we do use these principles to help us in our technical analysis, helping to set targets, helping to set entries, helping to set stops and exits and things like that. And then as always, you know, historical price activity, past performance does not guarantee future results. All right, let's take a look now at the candlestick basics. We'll go through just a few slides on this, and then we're going to talk about the entry signals and some of the technical analysis concepts. Now, if you have some questions, go ahead and chat those in there. I'll keep an eye on that. Barb does a great job answering your questions, but I love candlesticks. Candlesticks are just a great way to show the price activity. Again, no guarantee that this is going to be up or down. There's bar charts, there's line charts, there's a whole bunch of different types of charts, but we're going to go over candlestick basics. So the rectangle in a candlestick, the little box, you know, rectangle, square, line, different things like that. The rectangle's called the body, okay? It shows the relationship between the open and the close. The vertical lines on the top and the bottom of that rectangle or body are called the wick, or sometimes you'll hear shadow. And then there's colors. You can colorize your candles. Now, if you don't set a color, then at least in America, the defaults are kind of white and black. But you can use red and green. You can use green and red. You can use all sorts of different colors, whatever works best for your eyes. But when you do that, the white or green candles that you'll see in the presentations that we do, that generally is going to represent a close that's higher than where the open is. And that's the nice thing about candles and why I like them, is that you can see the candle color and tell instantly whether we closed higher or closed lower for the day, okay? Now, if you get a black candle or a red candle, are the traditional side ideas, then that means the close is actually lower than where the open was. So something might gap up and then close lower, but that would be basically a black body is what the candle would look like. And there's some other, if you want to take a deeper dive into candlestick, Barb's done some great presentations, little short videos in our bite-sized content playlist. She's done a lot of great little videos on different candlestick patterns and what those candlestick patterns mean or could mean as far as forecasting potential direction. Again, no guarantee that that's there, but from that history, right? That historical things when traders and investors have seen those different candle patterns frequently, okay, not all the time, obviously, but frequently there's been a bullish or bearish reaction compared or tied to that type of candle pattern. Now, again, no guarantees, doesn't work 100% of the time, but just be aware of that. But Barb's got some great, you know, candlestick little videos. They're short, you know, 3, 4, 5 minutes, so you'll want to go watch those. All right. Now let's talk about some of the technical analysis concepts again. And I'm just going real high level here. This is stock investing for beginners. I think what I'm doing today is introducing you to some concepts that are important to understand, and you can go a lot deeper dive here. They even have a test where you can become a chartered market technician, and that's an in-depth study of technical analysis. So we're just talking about the surface here, but these 3 things on this page here are so important to understand, and it really helps as you start to look at and analyze charts, how you can kind of visualize different things, like what would have to happen for trends to change, or what would have to happen for maybe a stock to stop going down, start going back up again. These are things that we look for as a technical trader or someone who looks at a chart, sometimes referred to as a technician. Now, again, past performance, no guarantee of future success, but here's the definition. An uptrend, okay, is a series of higher highs and higher lows. Now, what's the higher high and higher low talking about? Price. Higher high prices and higher low prices. It's stair-stepping higher. When it goes up, it pulls back a little bit, but doesn't go quite as low as last time. And then it goes up higher and then pulls back and makes a little bit higher low again. Okay, those are important things. We'll talk about that a little bit more as we go forward. Downtrend. Okay, downtrend is a series of lower lows and lower highs. Lower low what? Lower high what? Lower low prices and lower high prices. You know, in a downtrend, we'll make a low, we'll rally a little bit, and then it doesn't go quite as far. It doesn't go quite as high as it did the last time, and then it starts to sell off again, and then we make a lower low. All right, and then a sideways trend is roughly equal highs and equal lows. You'll hear the term consolidation sometimes with sideways trends. Another way to think about this, and I wish somebody pointed this out to me when I first learned this, was it's not always equal highs and equal lows, okay? If an uptrend is higher highs and higher lows, and a downtrend is lower lows and lower highs, then a sideways trend could be a higher high followed by a lower low, followed by a lower high, and then higher low, and so on. And you get this back and forth action where they're not necessarily equal highs, but there's really no defined higher highs and higher lows or series of lower lows and lower highs. Does that make sense? So that sideways trend can be really challenging sometimes to see where that is, all right? Now, once we look at those highs and lows translate into two concepts that are also important to understand in technical analysis. That's called support and resistance. Now, support is an area underneath the current price action where when sellers push that price down, buyers tend to come in. Now, why would that happen? Well, think of it yourself. You know, last time maybe Nvidia or Apple or Google or any other number of different stocks, you guys have seen those trend up really strongly sometimes and they pull back. But what happens is sometimes people will think, dang it, I missed that trade last time it was down at 90 or down at 200 or whatever it was. And so when it gets back down there, there's that historical tendency for people to think, oh, I'm going to go ahead and try to buy it down there. And so that's where that buying pressure comes in. And when we have multiple levels there hitting about the same price area, we call that a support. Now, resistance is kind of the opposite. It's the area above the price action. You know, last time it got up there, what happened? Well, people started taking some profits, started selling those stocks, drove the price back down. And sometimes you'll have that happen multiple times. And in this case, we're creating a sideways or horizontal support and resistance area. But this is another important concept to remember. It can also be what? Diagonal. Okay, there's channels. And again, Barb has some great lessons on price channels, and so does Cameron on Fridays. But support can be horizontal or diagonal. Okay, and it's important to understand that. All right, now we've gone through these concepts and we've talked about some of the very, very basic things with technical analysis. I see we have a survey there in the chat. If you would, click that link, but then come right back. You can do the survey later. It's just 2 quick questions. But what I would really like to hear from you is, number one, I'd like to know kind of what buy signal you consider your buy signal. And I'd also just like to know what else you'd like to cover in these Stock Investing for Beginners webcasts. Put that information in the survey. Really appreciate that. All right, let's go on to our taking a look at our key points and summarize our technical analysis concepts. Now, these are very, very important. If you take nothing else out of this lesson, this would be one of those things. The other thing, of course, I want you to key in on those buy signals, which we're going to talk about in a second. But key points, support and resistance are what? Areas. They're not specific price points. Now, this creates a challenge because when we draw a support line or we draw a resistance line, often that's at a specific price level. If you've seen any of Rachel Deshell's presentations recently, she does a great job. She uses that rectangle tool on thinkorswim, and she'll draw a little box that represents the area of support and resistance. All right. I'll show you how I like to do it. There's no right or wrong way necessarily, I guess. I guess there is a wrong way, but you know, there's lots of ways to identify that area. Okay. Old support, and this is a really important concept, old support may become new resistance, and old resistance may become new support. We've got a good example of that old resistance. You can see the stock was kind of banging its head here on the left side of the little graph. It broke out, came back and tested that old resistance, bounced off it a couple times, and then it started to make those higher highs again. And that's where it's testing the old resistance as new support. And that's a great concept. Now, does that work 100% of the time? Nope. Past performance, no guarantee of future results, all right? Now, it's important to note, now, when you're looking at your charts, this is just kind of a concept with technical analysis that I think is important to understand, is the more recent that support and resistance areas or those support and resistance areas are, the more relevant they tend to be for traders. But you do want to be aware of old levels. Like, for example, on this chart where the stock's basically on the little snapshot that we have of this short time frame here, let's say this is banging its head across the top of the graph and it's at $50. Well, a smart or a great technician would go back and expand out that chart, look at a longer time frame and see, is this an all-time high the stock is making, or were there some levels back in the past where this was a resistance level, and it could be resistance again, okay? All right, so now let's talk about this idea of indicators when it comes to technical analysis. And again, really quick high-level overview that we're going to use here for our technical indicators. Again, James Boyd has a great class on Mondays called Trading with Technical Indicators, and he goes into great depth on those. Cameron May on Fridays has a class called Advanced Charting, and he usually goes over a different indicator almost every week. So again, if you want to take a deeper dive, go see one of those webcasts. All right, now for us, we have a really simple plan. I introduced the plan a few weeks ago in lesson 4, I believe, where we started talking about trade, plan your trade and trade your plan. We have a very simple plan where we use a 50-period moving average and we use a MACD histogram. That's what's on this particular chart. But the point is that trending indicators, so you're going to have trending indicators, and then you have what are called oscillating indicators, and then there's probably a couple other categories, but those are the two main ones. Trending indicators like a moving average, and that's going to be generally over the top of the price action, okay? And what it does is it tries to smooth out that price activity, that up and down, those higher highs and higher lows. And really easy concept here with your moving average. Just look at the direction it's going. If it's pointing up, we would consider that probably uptrend. If it's pointing down, that's probably a downtrend. If it's flat or oscillating back and forth, we'll call that a sideways trend. Now, oscillating indicators, on the other hand, like the MACD, the RSI, the stochastics, whole bunch of others, those are typically below the price action, and they are displayed in that separate window. Now, both of these are very common. And so what happens, technical traders will often look for one or more indicators to confirm the bullish price action. Now, what does that mean? Well, when you're looking at the bullish price action, that's what creates those higher highs and higher lows. I have a few exercises we're going to go through today on a couple of stocks to look at that price action, and you're going to be amazed at your abilities when we're done, okay? Because I have some great questions and ways to go through this. I love this part of the technical analysis. Now, volume is another important concept in technical analysis, and it's also displayed below the price action. Now, for bullish trends, those higher highs and higher lows, what technical traders like to look at is that they want to see higher volume on what days? Well, on the days where the price action's going up. When the stock price is going up, they'd like to see that volume increasing. Now, of course, it's not going to go up every single day. If it's gone up 4, 5, 6 days in a row, then we expect that volume to maybe drop off a little bit. And that might be an indicator that, hey, maybe this trend or this current price activity is running out of juice, and we might see that top out and pull back a little bit. And so, when it starts to pull back, a technical trader in an uptrend is not going to want to see a whole lot of high volume on that pullback. They're going to want to see the lower volume on the pullback, indicating that there's a good chance, not always, but there's a good chance that that stock's going to make that higher low. Now, does it happen all the time? No. Okay, past performance does not guarantee future results. All right. Now, volume's also frequently used as a way to confirm a breakout. Now, this is kind of interesting because the very first buy signal I learned was that a breakout had to have a certain percentage of volume or it didn't count. Now, I think that's still important, but remember, some stocks are just highly liquid. They trade millions of shares every day. And one of the reasons that we like to see that volume be a little higher on the breakout is that institutional investors might be confirming that price activity with their action. They're adding into their positions sometimes is what we'll see that higher volume. But, the percentage higher, That depends on the stock, okay? If it's a stock from the S&P 100 or the S&P 500 that's already very liquid, trading millions and millions of shares, we don't need to see a huge increase in the volume necessarily on that breakout to call it a breakout, but you'll have to decide for yourself, what percentage above normal is a confirmation for you or not, all right? And then the other thing that's really interesting about volume is a lot of people just, whether you're an investor or a technical trader, they'll use volume as a screener. Maybe it's 250,000 shares. Maybe it's 1 million shares a day that they want to see. And so that's a good way to screen that. All right. Just taking a look here. Nothing that I can see as far as the questions go. Again, there's a link for the survey. Take some time to fill that out. Now, let's jump into my favorite part here is talking about 3 entry signals. Now, I'm going to name these 3 entry signals so you kind of have them in your notes and that you can go back and review this. I've included in the description of this webcast, there's a link already for a little YouTube short that I did on trading a bullish bounce. And we're not going to go through all the different ways to trade it. We're just going to kind of hit that high level. But in my opinion, there's 3 different ways to trade a bullish bounce. You can confirm it, you can trade it when it happens, or you can anticipate the bounce happening and go watch that YouTube short and get some more details on that. But today, we're just going to do the simple kind of definition. What's the definition of a bullish bounce? A bullish bounce, the way we define it, at least the way I define it, and most technicians define it, you may have a different definition, and that's okay. But a bullish bounce is a close above the high of the low day. Now that's a lot of stock market probably jargon. I wouldn't have understood that at all when I first started investing. So let's break this down a little bit. Okay, the low day. What is the low day? Well, the low day is the day in the pullback. Okay, after the stock's gone up and made a higher high, remember that, the stock might start to come back down. We have those black candles. What does that mean? The close is lower than the opens, what that means. And so we're pulling back here. And as the stock starts to pull back, the low day is just the day that has the lowest low in that pullback. Okay. Now, what's the high? Well, that's just what it sounds like. Okay. The high of the low day is the high on that low day price. Now, let me kind of throw out a little thing here. We're going to look at some stocks in a minute. But what if tomorrow the candle makes a little bit lower low? What happens? Well, now we have a new low day. Okay, so remember that. We'll come back around to that in a minute. All right. Now, the bounce, again, we define a bounce as a close above the high of the low day. You may have heard James or somebody else, one of the coaches, talking about this idea of cahold. Okay, C-A-H-O-L-D, close above high of low day. That's just a faster way to say that. There's a hold instead of saying all the words, but that may or may not be your buy signal. Okay. Now a close is honestly what it sounds like. It means close, like at 2 p.m. Mountain Time, 4 p.m. Eastern is when the market closes. And so a close above the high of the low day, if we came back in time and we looked, oh, today the stock closed above yesterday's high, which was the low day, we would say, oh, that stock bounced today. All right. Now, some traders consider that close to be the last 30 minutes of the trading day. Now, what I want you to do, okay, for homework, okay, and Info Nerd says here, does these represent day candles? This could be day candles, weekly candles, intraday candles, doesn't matter. The candle itself, if you're looking for a bounce, it can be related to whatever time frame you're looking at. All right. But here's what I want you to do for homework. I want you to start thinking about, and I'll give you some ideas today as we go through this, but I want you to think about what exactly is your buy signal when it comes to a bounce. Now, let me elaborate a little bit, okay? Is it a close, a literal close? So you come home from work and the market's closed and you place an order to buy the stock and it will fill the next day. Do you look at the setup? Now, write this down in your notes somewhere, okay? A setup, the bullish bounce, and I'll write these out here in a minute, but a bullish bounce setup is a higher high, a 3 to 5 day, sometimes a little longer pullback, stock trading near support, and then it makes a higher low. Okay, I'll include those. I'll write those out in just a minute. But some people, and I see Jay Richardson there putting hold, not close above the high of the low, but trade above the high of the low day. Okay, so what I want you to do is decide for yourself, what exactly is your buy signal? And then what I want you to do after you've decided that, I want you to go paper trade that like 10 or 20 times in a row. Find 10 or 20 different stocks and implement that buy signal in paper money to see how you like it. Does it work for you? Okay. All right. So that's bounces. Now let's define a breakout, a bullish breakout. A bullish breakout by definition is a close above resistance. Okay, now this creates a little bit of a problem because what did we just learn about resistance? Well, resistance is what? Is it a specific price or is it an area? Well, we defined it a minute ago that support and resistance are areas. They're not specific prices. So how can we say a breakout is a close above resistance? Well, that's what it is, but you have to decide, number one, how you're going to draw resistance. And I would encourage you to be real consistent on how you do that. I'll show you how I do it on my charts, but it's not necessarily the only way. And like I said, I really like how Rachel does it with hers. She does that little rectangle kind of in the area of that resistance, but I'll show you how I draw mine. Okay. Now, as far as a buy signal goes, which is what we're talking about, a bullish breakout buy signal, some traders will consider entry signals during the last 30 minutes of the day as evidence that the stock's going to close above their resistance area that they've identified. All right. Now, again, daily candles, info nerd, could be daily candles, intermediate, weekly candles, intraday candles, whatever. All right. Now, one thing that's important when you're looking at breakouts, and probably have heard Kevin Horner say this, and you've probably heard Rachel say this, some traders and investors will look for multiple closes above their resistance level before they consider that a valid buy signal. Some people will look for a certain percentage above resistance before they consider that a valid entry signal. So again, what I want you to do for homework, in addition to identifying your bullish bounce entry signal, what is your bullish breakout entry signal? Now, the reason I'm asking you to do this is because this was a real hang up for me when I first started. I saw the resistance and I was pretty good at reading charts fairly quickly. And I was like, oh, there's resistance. I can see that. But when it would break out above that, I couldn't take action. And I'll talk more about that next week of how you get yourself to take action in a lot easier way. But I didn't have that really defined breakout entry signal or that bounce entry signal. I had a vague idea, and the vague idea makes it really hard. Okay. So again, I'll give you some examples of some, potential buy signals for bounces and breakouts, but these are some notes that'll help you. Now, the last one is an indicator based. Now, this is the last of the three. We have bounces, breakouts, and indicator based buy signals. Indicator based buy signals tend to be a lot less what we call discretionary. It's either doing it or it's not doing it. Now, we've added with our 50-day moving average and our MACD, we've added what's called the breakout signal. Okay. On your indicator, when you add that to your thinkorswim chart, you can say show breakout signal. And if it does, then it'll show a little arrow. Okay. Now, trend indicator buy signals are typically given when price closes above the moving average. Okay, so like if it was trading below and now it goes above, that's what triggers that green arrow on our indicator that we are using, that 50-period moving average. If you don't have the breakout signal on, then just the close above resistance or close above that moving average would indicate, oh, that's a buy signal. Okay, now again, no guarantee that that's going to make any money. Man, that was a hard concept for me to get when I first well, that's a valid buy signal. They told me it was a valid buy signal. It's going to make money. Nah, doesn't always make money. Sometimes market news comes out, sometimes the trends change, sometimes we get in on a valid entry signal, and guess what? That can lose money. Welcome to the market. All right. Now, another way that indicators are used is that it might be a bounce. Like think of that moving average like a little trampoline. The price comes down to it, it goes down maybe a little bit below it and then bounces off of it, right? And that's what these blue arrows indicate on the little screen. Now, your oscillators, when they're giving a buy signal, there's usually an area. Like with the MACD, there's a zero line. With the RSI, you have different areas that are identified as kind of overbought, oversold, those sort of things. But oscillators-based signals are indicated with a close above or below specific areas. I've just indicated here a few on the MACD where the MACD went from red to green, and that's when it crosses that zero line. Most technical traders that use a MACD would look at that as a potential entry signal or at least a trigger to confirm something they're seeing on the chart. All right. Now, another note that's important is traders and investors often use multiple indicators to confirm an entry signal. So how does that work? Well, we're using a MACD and a moving average, but I would caution you not to use too many. I've seen some people's charts where they have like gazillion indicators on there and they're waiting for all of them to line up and they just never get a buy signal, so they never take action. So be cautious there. Don't use too many indicators. And again, just because we got a buy signal one time doesn't mean it will be profitable. Okay. All right. Now the fun part. Let's go look at some examples. We've got about 15 minutes here, and I want to go to our thinkorswim platform. And the very first one I want to do is take a look at a bounce. Okay. Now I'm going to put this in here and I'm going to type some of this out. Bounce is that hold. Okay. That's our definition. Now the setup, okay, for a bounce is higher high, 3 to 5 day pullback, near support, and the last thing is it's going to make a higher low. All right. Oops, let me move that. Okay, so this is kind of our setup. Now, one of the things that was so frustrating for me when I first started learning about these entry signals is I always felt like I was a day late or a week late or whatever. It's like, I should have bought that yesterday. Dang it, I should have bought that a week ago. How many of you have ever felt that way? Okay, you guys found this anymore? Have you ever felt like you were late to the dance? Well, the one of the ways, now this again doesn't solve all the problems, but the way that is helpful is to identify the setup. So I just have an example here, and this illustrates the idea of a bounce, and also that a bounce the next day doesn't necessarily mean it's going to be profitable. Okay. And then are there entry signals for, long term where we would have to eye more on fundamental? Well, last week, JD, we talked about those fundamental components, and I wouldn't say there's a tech or a fundamental buy signal per se. If it meets the fundamental criteria, oftentimes fundamental investors will just invest in that particular stock. What we're doing in our little example strategy here is we're combining technical analysis and fundamental analysis. And so we're using the fundamental analysis like we did last week to help us select some stocks that we feel comfortable maybe purchasing. Again, not a recommendation. And then we're using that technical buy signal. In our example, we're using an indicator-based buy signal, but I want to go through these other three, or the other two, the bounce and the breakout. All right, so you guys walk through me here with me. Now, you should be able to see these little green arrows. Let me change my my drawing tool to this arrow so it's a little easier to see. But you guys see these little red and green arrows here? Again, this is the chart. It says breakout signals. If you go to studies, edit studies, and then you come in here, it'll say show breakout signals. We have yes. This is what creates those red and green arrows, okay? So right here, you can see there's a green arrow. The stock the day before had closed below the moving average, and then it gapped up and closed above the moving average, and that's how we got a green arrow, all right? Now, we can see we had some old resistance over here, and the stock gapped over the old resistance. What do we know about old resistance? Old resistance might become what? New support, right? Now, in this case, we had a green arrow on the moving average, and the moving average was rising slightly. Okay, it was really flat before. The MACD had gone green several days earlier, so technically speaking, okay, that was a valid indicator-based entry signal using the rules that we've been going over a few weeks ago and that we're continuing to trade for practice here in our paper money account, that we could have bought Amazon that day. We could have bought it there at the end of the day, and it got a red candle, so that means it closed lower than the open. We closed down here about 244. That was a valid buy signal, okay? Now, the next day, stock gapped up. We would have felt really good about that. Now, let's take a look at this setup again. The stock setup, we have a higher high. How do we know that's a higher high? Well, because the previous highs were lower than that. Okay, don't make this too complicated. Now, what else are we looking for in that setup? Well, 3 to 5 day pullback. Well, there's day one, day two. So this might pull back for another day. We're kind of expecting, now again, past performance doesn't guarantee future results, but as a technician, we're looking at old resistance. We would not be surprised if it comes all the way down and touches 240. That's just what we expect to have happen. Doesn't always happen. But in this case, we have a little bit of a pullback, and that candle pattern right there, if you go watch barbs, you might look at that and call that a hammer. Okay, now I'm not going to go into details, but that might be a bullish entry signal. So here's the deal. And this is what I want you to get good at, okay, is start asking yourself, okay, this is a great question. What would have to happen tomorrow for this to be a valid buy signal? Now, if I have my cursor on this candle, you can look over here at the high, and guess what you'll see? The high of the low day, right? So the high of the low day right there is 251. So here's the question. Will, okay, because I know you're in here, Jay Richardson, Kevin, a couple other Dragon, what would have to happen tomorrow for you to buy this stock? Now, again, not a recommendation. I want you to get through this process. If you're new and watching today, this is a great exercise, okay? So what would have to happen tomorrow? Now, if you're just doing a close above, you would just say, if that closes above 251 tomorrow, I'm a buyer, okay? So we move the chart forward, and the stock does not close above 251. It closes where? Look at the C value. Closes at 243.04. So here's the question. Is that a valid buy signal day if you're a bounce trader? Nope. No bounce. Okay. Now it still has the 2 green arrows, so we still could buy it from the 2 green arrow prospect. All right. But that's not a bounce. Now, what else happened this day? Guess what? This is so cool. What happened? We got a new low day. So now what do I do? Well, I say to myself, higher high, check. 2 to 5 day pullback, check. Getting down near support. Well, we're getting closer to that 240 level. Another little tidbit here for you. Gap levels might be support levels. Okay, that could be a little support area there in the gap. So we ask ourselves, what would have to happen tomorrow for me to consider this a valid bounce buy signal? Well, has to close above 250.38. Okay, next day. Did we get a buy signal? Okay, no. How long does that take? How long does it take to figure that out? 3 seconds, 2 seconds, 1 second? It's not a buy signal. Guess what? We're done with our analysis that day. Don't worry about it. All right. Now, what else happened? Well, the low this day is lower than it was the day before. So guess what? We have a new what? Low day. New low day. Now, what do I ask myself? What has to happen tomorrow for this to be considered a valid bounce buy signal? Well, if we're just going with that close, it would have to close above where? You guys chat that in. What's the high value this day? You guys see it? Look at the H. Okay. What's the H value that day? Do you guys see it? 244.90. What would have to happen tomorrow for this to be a valid bounce signal? Close above 244.90. Next day, stock gaps up, trades up and down, up and down, up and down, and we close at 248.40. Is 248.40 higher than 244.90? Answer yes. Guess what? Valid bounce entry signal. That's all there is. That's it. That's that bounce buy signal. Now here we are today, or actually a couple days later. The stock today is actually down below our entry signal. Is that going to happen to us sometimes? We get a valid bounce entry signal, and now we're losing money. Well, I hate that bounce entry. Never going to trade that again. No, it's just we had a valid entry signal. Stock right now is down a little bit today. Hasn't broken our support level. Hasn't broken the moving average. But it just goes to show, and this took me a couple years to learn this, so if you can learn this today, you're going to be in great shape, okay? Sometimes we get a valid entry signal. Next few days, we're just down. We're losing money on the trade, and that's okay. Okay, welcome to the market. All right, let's take a look at the next one, and we'll probably finish up on this one. We've talked about that indicator-based signal already, but let me go to the next one, and this is a breakout. I said I would show you how I like to draw the resistance. What I like to do is when the stock starts to consolidate, I like to draw my line across the very, very top of one of the previous, not the current, but one of the previous highs. So in this case, the highest high was there about 124.61. This is on GILD. And then I also like to draw another line that touches as many candles in that little consolidation as possible. And so like for me, this is that area of resistance, okay? Now, a breakout, again, is where it closes above resistance, and what I want you to do for homework is work on, the JD saying, I wish there was a candy for entry. Well, you can do that. You can just define that, what it is, and let's say, here's another little entry signal. Let's say that we want to be more like Will or someone that looks for that trade above resistance, right? if it trades above resistance, then I want to buy this stock. Well, you could say, well, how far above? You could go 1%. Well, the high end up there is at 124.61. And you could say, well, if that trades above 125 and change, or what's that? Call it 126, be about 1%. If it trades above 126, that would trigger an entry. We could call a buy stop limit order. All right. And actually, I want to show you how to do that on this one as we wrap up. But I like to draw resistance with a line at the very, very high, and then another line where we touch most of that level, and that kind of makes that little rectangle area. But let's go to Gilead, and I'm just going to right click right here on my chart, and I'm going to do a buy order to buy this, and we're going to edit it. Okay. We're going to say if it trades like 1% above 124.61. So let me grab my little calculator. Okay. 124.61 times 1.01. And that would be like 1% above that area. That gives us an entry trigger at 125.85. So I'm going to put 121.85 here in the buy order, or the price. Now, if I leave it as a limit order, what does a limit order say? A limit order says, well, just buy it at that price or better. Well, I don't really want to buy it when it's still in this resistance. I want to buy it when it breaks out. So the type of order that a technical trader might use here is a buy stop order. Now, a buy stop order says, don't do anything, Mr. Broker, stop until the stock goes above 121.85 and then buy it at the market. Well, that's a little scary. What if it gaps up to 140 tomorrow? Well, I don't want to buy it at 140. So we're going to do a buy stop limit. We're going to say the maximum I want to pay for this is, say, 122, and we'll just add 50 cents. So what's that, 35? You know, so it's got to be in this window when tomorrow, if it trades up through that, or in the future, we'll make it good till canceled. If it trades up through that, then it will trigger that breakout order for us. Okay, and then how many shares would we want to buy? Well, in our example, we're investing up to $500. So we're going to do 3 shares. Actually, we do 4. Right? That'll be 4. So we hit confirm and send. Just double check our buying power here. It's lower than 500. And we're saying if this breaks out tomorrow and it goes above that resistance by 1% or more, then trigger an order for me. And we'll just put this in our lesson 1 through 8 here. We'll send that off. And now we've got a working order for us there. All right. Well, let's go ahead and wrap up today and kind of look at what we learned. Okay. Tenets of technical analysis real quick. Price moves in trends. History repeats itself. And anything and everything that can affect the price is already doing so. Those are the 3 main beliefs. Candlestick basics, we covered those. Technical analysis concepts, trend, support and resistance, volume. We talked about indicators a little bit. Go check out some of our other webcasts on those particular topics. We talked about the buy signal. Homework for you today. Go figure out what you want to use for your bounce entry signal. Go figure out what you want to use for your breakout entry signal. You know, just define it. I'm going to wait for the close. I'm going to trade if it goes above by 1%, you know, that sort of stuff. Or the indicator one, which we didn't have time to cover today, but the indicator one, the green arrows are technically green until they turn red. But a lot of technicians, when they're looking at indicators, will say, well, it's got to be within 1 or 2 days of that green arrow. Okay, so go look through the watch list. There are some stocks that have a fairly new buy signal within 1 or 2 days. Go look through the S&P 100 and see what's there, and paper trade those that you think have a buy signal on them. And then we did review some stock entries today. Okay, so just again, kind of wrapping up here. Hopefully this was helpful for you today. No guarantees that those buy signals that we talked about are going to be profitable. Took me a long time to get that. So be aware of that. Fill out that survey if you will. Give me some feedback on what you'd like to see. If you have some questions, post that in the survey and or in the chat. What I like to do often is I'll put the survey questions in the YouTube comments for this webcast, and I'll answer those inside the YouTube comments so you can see them there. So hopefully that was helpful for you today. Have a great day, everybody, and good luck in your investing. Thank you.